Mihir, hi, very good morning. This is Harsh here. Let me start off by setting the context. We're at the cusp of Q3 earnings starting to trickle through. Give us a sense. 2025, you've called it a bit of a lost year, a year where expectations ought to be reset, if I can call it that. What should we expect from 2026? And will Q3 be that turning point of sorts? Is that how you're seeing it?
Uh, I wishing you and your viewers a very happy 2026 to start with.
Wishing you the same,
You know,
sir.
as we start the year, there are a few points that we need to keep in mind. The Let's look at the good things first. First is that we are starting after a bit of a consolidation. So while the Nifty is up 10% for the year 2025, the broader markets are flat to negative. So we are starting with a time correction, a price correction, a valuation correction. So most of the issues about valuations or market having overshot themselves are past us. India also underperformed most of the other emerging markets, including China and the developed markets, significantly after many years. So I think we've kind of done our bit as far as taking a breather is concerned. And as we go forward, there are a few things one needs to keep track, and that's what probably will drive the story for 2026. One is we need to really see whether the tax cuts, the income tax as well as the GST cuts, which were introduced, they did create a pickup in consumer sentiment and demand. So we saw that in October, November. But whether it sustains and follows through for the first quarter of 2026, that remains to be seen. Second is we really need to get the trade deal up and running. So mathematically, while you can say that we can divert exports, etc., and it should not have a longer term impact, but the fact is that it does create a pain point for small businesses, and more importantly, from the foreigners' point of view, from the FII portfolio point of view, that's not a good sign if we delay the trade deal 2 months. So we do need the trade deal to be signed with the US sooner rather than later, because that will get FII flows hopefully back into the country. Third is India actually got sidelined last year because of the technology hype. Now it looks like the technology sector is doing well, but not as hyped as it was. So hopefully the peak hype around tech, global tech, which really propelled US, Japan, Korea, Taiwan, all the tech supply chain, including China, that took away a lot of attention of global investors. So with that hype kind of cooling down a little bit, we should see India with its natural growth, domestic demand, government, this thing, come back into the limelight. And the fourth is that the good thing in terms of tailwind is that the government and the RBI seem to be on the same page as far as stimulating growth is concerned. So that's a good positive for us because we will see pro-growth policies, including PLI, Atmanirbharta, etc., continuing. So that should keep the chatter up. So I'm cautiously optimistic, and with a couple of triggers like the trade deal, 2026 should turn out to be a good year.
Okay, so that sounds good, and cautious optimism is the mood in the market right now. Mihir, hi, morning. Talk to us about where do you think the growth thrust could come from in the quarter three earnings. So far, we've seen majority updates from the banking and consumption space being good, in line or better than expected. A very few names have disappointed from both of these pockets. Do you think that banking and consumption could continue to drive the growth in the market?
I think it'll be selective
Okay.
because if you see the numbers, not all banks are reporting very strong numbers. Some of the mid-cap banks and NBFCs are reporting good numbers. Some of the large caps are reporting okay numbers. But in general, December quarter did see a spike in consumption, as we discussed, because of the GST cut and general busy season activity. So I would expect good numbers from the discretionary companies, from the auto companies, even from some of the banks and NBFCs. And more importantly, commodities have been very strong. So even that pack should lead to earnings upgrade. So hopefully, quarter three, the quarter ending December, should see more upgrades rather than downgrades. That's the feeling.
Mihir, as you were mentioning earlier that returns have largely been flat within the SMID space or the broader markets. You believe that there is merit in expecting an outperformance there within the mid cap and the small cap basket in 2026?
Certainly, because first of all, there is more scope for stock picking in the mid and small cap baskets for sure. Second is most of the newer higher growth segments do tend to start off as small and mid cap companies. So, if you really want to participate in the newer sectors or the newer growth stories, the default options are there in the small and mid cap space. And third is the sheer number of stocks. You have 100 large caps, you have 150 mid caps. But after that, there are at least 800 to 1,000 small caps to choose from, which have some meaningful market cap, about no more than 2,000 crores in market cap. So it's a very large basket to choose from. So I would say that, as we discussed, we have had a time correction. We've had a price correction. If you look at the consensus earnings for large caps compared to mid and small caps, the mid and small caps consensus earnings are a little bit higher for the next couple of years. So all those put together, I think it's a good equation of growth versus valuation that they offer at this point in time.
Okay, and Mihir, I remember you've been positive on the defense space for quite some time. Talk to us if that positivity is still maintained and what looks good from that pocket.
So in the last few weeks, we have seen quite a few, meetings in the government, and we have seen order acceleration, order outflow acceleration, at least acceptance of necessity, etc. So that activity seems to be continuing. And with further uncertainty in Ukraine and this Venezuela issue plus Taiwan issue, I think the scope for exports is also increasing day by day. So this is one sector where I believe that across the spectrum, whether it's land, air and water, there is a lot of scope for domestic production. Plus, shipbuilding is another trend coming up, not only for military purpose but for commercial. So all those things put together, the government is very serious about promoting local manufacturing in these spaces, and it is a long-term secular story, not only for Atmanirbharta, domestic manufacturing, but also for exports.
Mihir, what's the risk like with regard to the uncertainty both geopolitically as well as from a tariff perspective? Do you believe that those are big risks from an India market standpoint, or would you not be too worried or bothered about it? And would you therefore, would there be themes you would avoid?
No, my default, assumption is that the deal will happen. And only thing is you can't time it, obviously, right? And the deal will happen because the two largest democracies in the world should not, be adversarial. We have to work together. I think militarily, commercially, it all makes sense. So it will happen sooner rather than later. So I'm not taking any pro or anti-deal bets, frankly speaking. But only thing is, if it gets prolonged, the deal gets prolonged, then the FII money will probably get delayed. The inflow of foreign money that can get impacted because they are also looking at geopolitics. And when you have some more exciting stories in commodities or tech, you don't want to then take a contra bet. So to keep the sentiment up, I think is more important. As we discussed, the GDP damage may not be that great, but the sentiment, may get impacted if the deal doesn't happen soon.
And on that note, Mihir, what is your take on IT as well, a largely external facing sector, and the fall that we've seen in rupee? Is there any renewal of optimism in the IT segment from your end?
In the large cap IT space, no,
Okay.
because currency, while it can provide short-term tailwinds, it gets adjusted in the prices. So we haven't seen a structural improvement in margins, even though the rupee has been depreciating forever. So because even the customer knows what the exchange rate is, so ultimately it gets repriced. More importantly, the current business model of the large cap IT companies is basically going to get them to single-digit growth, and most of the companies, as you see, have given guidance of kind of single-digit growth. So that's not really exciting enough for a country like India, and that's the reason while we have exposure to tech, it's mostly in the mid caps, stock specific items, not so much overweight in in fact, we are underweight in the large cap IT space. So that's how we are approaching the sector. And typically, the third quarter tends to be a bit slow in any case. So let's see how the results come out.
You've spoken about financials, you've spoken about auto being some of the ways you're playing the domestic, growth cycle or consumption cycle, if I can call it. What else? How else are you playing it?
So as I said, we are playing some of the gold themes, for example,
Right.
through NBFCs as well as through the jewelry manufacturers. And while structurally we tend to be underweight on commodities, ferrous as well as non-ferrous, there probably is a shorter term tactical call to be taken in the commodity space. So that's where we are also looking at, apart from the domestic consumption themes and the domestic investments themes.
How do you look at manufacturing? Within domestic manufacturing, is there some positivity that you're seeing in terms of the pickup in manufacturing and some of the bigger themes, right, Mihir? Something like an EMS. Do you expect that valuations are reasonable enough given the kind of growth that one could pencil in with regard to some of those sectors, those very, very high growth sectors? Are valuations something that you're comfortable with?
So we have some exposure to EMS. We used to have a lot more.
Right.
Currently, we have a bit less than what we used to have. Mostly on account of valuations and underperformance of the sector, and plus we are also expecting some more extension of some of the schemes. If that happens, then you will see a longer term trend continue in the EMS space. In the manufacturing space, we are basically not. I mean, we're looking at the suppliers. So, for example, capital goods, the T&D space, the data center supply chain, etc. That's the kind of things that we are looking at. So, for example, in data centers, while we don't have exposure directly to data centers, we have exposure to some of the manufacturers of gensets, etc., which need to supply the high-end, higher capacity gensets for backup, etc. So, we are trying to play those things in the manufacturing space.
All right. Mihir, thank you so much for joining us this morning, giving us that perspective across the board with regard to Indian markets.